Sign on once and save time with foremostproducers.com, our new website that makes it easy to quote and book Foremost business. Foremost, for you. Foremostagent.com.
Despite a slightly improved economy here in the U.S., the global economy is not out of the woods yet, according to Carolyne Spackman, Vice President and economist for AIG. In fact, global economic growth actually slowed in 2012, and that could impact a continued recovery here in the U.S. Spackman recently spoke on the global economic situation at the Plus annual convention in Chicago. In this interview with MyNewMarkets.com associate editor Amy O'Connor, Spackman explains what has caused the worldwide economic slowdown, how that affects U.S. businesses, and what insurance companies need to be aware of in this global marketplace.
The key risks today are the return to recession in some countries and slowing growth in others. When you look at the Eurozone, they re-entered recession this year. The United States faces the impending fiscal cliff, and the CBO has said that that could lead to recession again in the first half of 2013. That would be more than half of the world's economy potentially in recession. Also, Chinese growth has been slowing. That's certainly a concern. And the effect of slowing growth on commodities prices could also affect other regions, Latin America, Africa, commodity-producing regions. So there could be potential impacts around the world. And when we look at the Middle Eastern environment, there are still some potentials for worsening of conflict there, the Syrian situation with regard to Iran. Those are the main concerns I have. Obviously, if the conflict in the Middle East deepens, we could see effects on oil prices. That would affect every business around the world. Everybody has to buy gas at the pump. That will reduce consumer spending for everyone. Transport costs, every company, virtually every company could be affected. So there are a number of risks right now around the world.
Spackman says a growth slowdown in the Eurozone lowers demand for American companies' exports and impacts American businesses, like insurance companies, that have exposures and investments in European companies.
We have more than $600 billion of exposure in our banking sector to Europe. So this is as the situation is more bleak in Europe, that actually raises the probability of default and could affect our banking sector here. So there are several different ways. Also, our businesses have investments in Europe. They're not making as much money off of those investments because of falling demand. So if you have a factory in Europe, you're not going to necessarily be able to sell as many cars if you're an American company that has a subsidiary. So that's going to affect American businesses as well. And also if you have inputs that you're relying on from European countries for the manufacturing process here, you might be affected. A key problem, I think, in terms of the insurance market, what we see is that the Basel III requirements in Europe are affecting the banking sector there. They're having to raise capital. And we're just concerned that corporations to which we have exposure as insurers may not be able to roll over their loans. They may experience difficulty in obtaining credit. So there are some countries where the business environment just is a little more complicated and difficult to operate in. But there are other countries where short term they're experiencing payment difficulties. And so we're very careful to make sure that the exposures that we have in countries like this are very high quality companies that we've known for a long time, with which we have a great relationship, that we have confidence in, that we trust. And so our attitude is we don't always want to avoid the country, but we want to be very careful about doing business in some countries that are experiencing difficulties.